in the Bank.
Welcome to the second episode of Money in the Bank. I'm really excited because we have Brett here with us again today, but we have a guest speaker, Adam, with us.
Hello.
So the next 6 episodes, we're going to kind of break down each section of your budget and deep dive into areas where you can improve what you're doing and how to save money and get back on track with your finances in general. So really excited about this one. So today we're going to talk about savings and debt reduction. So I think this is a really good topic for a lot of people. A lot of people, maybe you haven't boosted your savings like you should, or maybe you don't really understand where your savings level should be at or why you would even save money. I know a lot of people that they budget to zero and none of that includes savings. So we're going to kind of talk about that, and then we're going to talk about, okay, so you've already found yourself in debt, and what are some good tips to get out of it? And then we're going to walk through each different section of the budget and talk about ways that you can cut back to come up with more money to really pay off your debt faster. So we'll just jump into savings. So I guess I'll ask my 2 guests here. Do you guys save at all for retirement or emergency funds or anything like that?
Growing up, that's something I was taught to do. However, I can admit that in my adult life, I've not been the best at it so far. I've started a 401k, but however, my savings account itself for emergencies and such is not where I want it to be by being very not quite existent.
Yeah. What about you, Brett?
I've been a saver forever. I used to play with money when I was a kid. I used to, eat pennies a couple times, I think. Making sure nobody else could get it, right? Yeah, I had piggy banks and change sorters, so I was keeping money. I had a bank account really early as a kid, so feeding money into that bank account was always something I could do. That was my treat. In getting my allowance, I could save some of that, put it in the bank, and then watch it grow. My parents would say "Oh, you have this much more, and it's going to turn into this much." And so that got me excited at an early age to know that I could turn my money into more money, just by putting it to use in a small medium like that, like in a bank or certificate of deposit or something like that.
Yeah, I also was raised similarly where every time I got paid, birthday money, from grandparents and stuff, half of it had to go in the bank, 10% of it had to be donated, and then I could do whatever I wanted with the other 40%. But as I started putting more money in the bank and kind of watching it accumulate, even as a kid, I was like, well, I want to get more, I want a bigger number, because I feel we're in the era of, video games, so it's if you got a high score, that was good. So, as a kid, when I was, 9, having, that high score coming out of the bank account was, the cool thing. And then once I could start babysitting, and I was like, oh my gosh, people are going to pay me to just, eat their salt and vinegar chips, I can do this. So, it was, kind of easy for me to, earn more money and put it in there. And then I guess that kind of translated into my adult life where I already had that discipline. So I was like, of course I should be saving money. And
I want that number to be bigger. I want to see it keep growing.
Yeah, I feel I know a lot of people that they're oh, you should enjoy life and spend more money. But I was I enjoy watching that number get bigger. So
So you are enjoying life.
Yeah.
It's just what you prefer.
Right.
It's great.
Yeah.
Yeah, I always treated those as 2 kind of separate numbers. What I used to spend to enjoy life. I'm I'm not going to touch my savings to do that because that's doing its own job. That's growing itself to become more money in the future. But I'm going to, if I want something, I'm going to do something else to get more money to get that thing.
Well, and in a way, don't you think that saving money it's kind of delayed gratification? So, I saved all this money after college so I could buy a house, which actually gives me a lot of, enjoyment in life. But to get there, I personally wanted 20% down, so I had to save a lot of money for that. And so, you're still enjoying life. You're still doing things to enjoy life, but you're just it's delayed gratification instead of instant gratification.
Playing long goal. And that's a huge thing with our generation. I know I fall victim to that where I want that instant gratification. I want that endorphin rush of, hey, I just did something for myself, but it took very little effort. I could just go to the store, buy something for myself, feel good. But the long term where you saved up, you worked for it, you earned it, and then you could make this huge life-changing thing like buying a house, you get that huge rush and that good feeling from it.
Yeah. Well, and I even think in terms of retirement, watching a 401k grow is kind of well, that's my future. That's my okay, 50-year-old self, you worked hard enough. I'm not going to make you work all the way till 65. So here you go, but sometimes I think people don't think of it in that way of you are paying yourself. You're just paying your future self. So you know, for me, like, I think it's really important to at least, like, match what your employer gives you for a 401k, because otherwise you're turning down free money.
Absolutely.
Right. That's totally free money, right? They're willing to match you at whatever rate it is, and, you know, take advantage of that. Like, that's the number one rule that everybody's told me since I started working was, you know, my dad, you know, he worked for 40 years, and, you know, in a corporation. He's like, that's the number one thing. That's what's going to pay you the most over time is if you match that.
You're going to see that big return.
Yeah. Well, it's like 100% return rate that year, right? Like, so, I mean, personally, so just to get into some numbers here, because I love numbers, but I recommend saving between 10 to 15% of your savings in a 401k when you start working. So, you know, a lot of people, they start with the match, but then if you can, like, ratchet up, I always think of it like tightening braces, like, you know, when they put that extra wire on, like, but if you go,
that
like,
painful experience.
well, but they start, like, they only go to the next wire, right? Instead of jumping, like, 6 ahead.
Exactly.
So, like, if you start at your employer match of, like, 3 to 6%, let's say, but then you slowly, like, add 1% at a time, like, you don't really notice that out of your paycheck very much.
You get accustomed to that little bit of difference, and after years of that, you get that little difference. It doesn't feel like you made a huge change because you've adjusted with it.
Right.
Because how many people have you talked to that started out doing that or started out with a higher match or a higher contribution to their 401k, and then later on were like, yeah, I had to turn that off because I didn't have enough money. You know, like, I can't even think of anybody that I've ever talked to, because once you're used to it,
exactly,
you just be, you know, that's just the way of life. But nobody is gonna, you know, have extra money on the side and be like, and then think about it later, because you only set it up when you start your job, basically, for most people.
Yeah,
right.
You set it and forget it, right? It's
well, I personally like to rebalance mine every quarter, but
so for someone like myself, I know when I set up my 401k with my job, I did the match. I think I'm at like 6%. I wouldn't even know how to go about changing it now.
Really?
Yeah.
So, I mean, I know with my employer, we have like a employee portal where we can log in and change that. But actually, our 401k is independent. So I literally go to 401k.com. It's through Fidelity. And on there, I can change my contribution limits and I can rebalance my portfolio. So I'm sure somewhere, like, do you know where you can, like, see your account balance?
Yeah, I get all that in the mail, like, once a month type deal.
So with that, it probably comes with a website where you could log in and create an account.
Okay.
Yeah, because you own that, right? That's your
Right.
stuff. It's just set up like, you know, tangential to your company
Mm-hmm.
so that they can add into it too. But if you left the company, right, that would go with you.
Exactly. They don't keep my money.
Yeah, so it's your login,
Right.
your account, your settings, your distributions of
Yeah.
the accounts that the 401k is growing at. And
it's usually through, like, one of the big brokers, like Vanguard or Fidelity.
Transamerica.
Yeah, Transamerica. So on your statement, it should come with a website, and you should be able to log in using, like, your account number the first time and then create a username and password.
Okay. So that's something I've never thought about actually adjusting. It's something I know I've wanted to, but I've never had the knowledge of, like, how to go about doing this other than call and get placed on hold and spend a day doing this kind of deal.
Yeah, well, and I think, like, especially our generation, we don't want to call. Like, if we can log into a website and click a button, that is, like,
100%
perfect.
true.
That is
I will
so
spend 2 hours trying to figure out where that button is rather than call and pick up the phone, right?
Yeah.
E-payments and e-everything.
So kind of moving to the next level of savings, like 401k is like really long distance, right? But like, so emergency funds, do you guys like have those?
Yeah, so I've always been very cautious with my spending and, you know, assuming something bad's going to happen, and, you know, setting up an emergency fund was something I learned about early on, right? Having a set amount of money set aside in the event that something, you know, the most catastrophic scenario would occur for my particular lifestyle at whatever time that was, right? So there's safety nets all around when you're a kid growing up. Like, maybe your parents can cover you if something bad happens, or if you get in a car accident and you don't have enough money for another car. Like, what do you do? How do you, you know, do you have a couple $1,000s, you know, set aside, you know, in case you get injured or you get a car accident or whatever? Or, you know, that money that is not to be touched for any other spending. It's only worst case scenario type stuff. And it's usually not like a tremendous amount of money. But, you know, you add to it a little bit over time, and then it grows to be like a very dependable safety net for you. So yeah, mine's always been around 10 to 12,000. I think I was overestimating kind of what I thought it should be when I was single, you know, and just starting out for the first time. So I was trying to hit that 12,000 number like right off the bat after I graduated from college, you know, and I got to it, you know, right after I got you know, a good paying job when I graduated. That was a lot easier to get to than when I was like working part-time in different areas through college and in high school.
Yeah. Well, and you raise a good point. So a lot of emergency funds should be 3 to 6 months of your expenses. So if you lost your job and you're out of, you know, a job for 3 to 6 months, can you afford to keep your house or apartment and car and eat, you know.
Continue to pay your responsibilities.
Yeah, yep. And all of your fixed expenses to keep yourself alive and keep living and have life. So I've always kind of kept that like 3 to 6 months in the back of my head. And for that, you know, you have to know what your expenses are, which I feel like is a weak area of a lot of people. So using something like Mint or Personal Capital to know your expenses, to know where your emergency fund should be set at, I guess is really important.
Now, what is Mint or Capital?
So they're like online web-based trackers, essentially. So you can log in and enter all of your login information for like banks and stuff, but it's safe. So like Mint uses the same security as TurboTax. They're linked. Okay. So you can enter your bank accounts and then it'll pull like all of your financial information into one place. So you can see your 401k amount and your bank, you know, your savings and your checking. And then any loans you have, you can load in. And then you can set goals of like, for me, you know, I said I want to pay off my student loans back in the day. And then I could like watch my progress every month and see like how quickly. So it kind of gives you a good view of all of your expenses, I guess, and everything that you have.
Because you can link credit card, and the reason I started using it, and you know, this was like 10 years ago now almost, I think it was what I considered the best thing I ever found on the internet.
Really?
Right, at the time. And it was just, it tracks everything that you do and spend money on, where your bank accounts are, manages everything for you, categorizes all your spending, so you know how much you're spending on restaurants, you know how much you're spending on, you know, fast food versus restaurants, or gas, or everything in your life categorized, and be like, okay, now I can see what I'm doing, right? Because there's no other way you'd keep track of that. Mm-hmm. Even if you pulled up your credit card statement, this was before like even some services even categorized it for you. It was just like blank dumps of numbers.
Exactly.
Right.
You see this amount on this date, right. But that doesn't really tell you.
You couldn't even figure this out unless you were like, you know, using the old method of, you know, keeping a ledger in a checkbook, or keeping a ledger using cash, right, and knowing everything we were spending. So this was the automated way of doing that, and like presented in a graphical fashion of like, here's everything that you're doing, and then you could set budgets in there too and say, you know, am I spending too much? You know, my budget is this much on restaurants, and it'll let you know like, hey, you're getting close to your budget in restaurants. You know, cut back, start going to the grocery store for the next week.
Interesting. So it will actually take, hey, you're spending roughly 4 times a restaurant a week, or etc., something along those lines, and you can visualize it.
Yeah. Well, and you can like set like, okay, I want to spend, you know, $100 on restaurants this month, and then once you get to like 75% of that, it'll be like, all right, you know, you're a week in and you've already spent $75 on restaurants, so good luck the rest of the month. Right. Hope you like ramen noodles. But another thing I really think is cool is you can set goals in there. Mm-hmm. So you can be like, I want to save a $3,000 emergency fund.
Right.
And you can like watch that savings account grow. So something I always like doing is having a separate savings account, and I direct deposit right into it. So instead of like getting my whole check, I only get the part I can spend. Mm-hmm. So the rest, it goes where it's supposed to before I even see that final number. And that's always kind of helped keep me honest and keep myself saving in the right direction. I think you've kind of done that too.
Yeah, I've done that since the very beginning. So most people probably don't know, or it depends on your bank. You can ask them to have multiple savings account inside the account that you have with them. Mm-hmm. And so I had a credit union growing up, and you know, I had one checking account and I had one savings account. And then I found out, well, I can have like up to like 10 savings accounts. Right, so then I could itemize, or I could distribute categories of information for, I want to put money in this account that I'm going to save for a new car. Or I'm going to put the money in this account that's for my emergency fund. Mm-hmm. And this one's only going to be for stuff that I can go out to eat, or restaurants, or entertainment, or do whatever fun money with, right? That's going to go in there, and then I'm going to have like a dedicated savings account just for, you know, building up more money and, you know, doing something with. Like, do I want to invest in real estate in the future? Do I want to put in a 401k? Like, make this money do something for me, you know, or have like a big money to buy a new computer or something that's $1,000, or a large purchase that I know that I want to do.
So how do you decide how much you want to put in an emergency fund, in your extra savings account, your checking account? How much do you allocate and where?
So I always say that you should pay yourself first. So for savings, I recommend that you save at least 10% of your take-home pay in some regard, whether it's for your, you know, personally, I think get your emergency fund filled up and then save for other things after that. You know, I didn't start saving for a house until I had an emergency fund saved up, because kind of what's the point, you know? So I say at least 10% of what you take home you should save. But at times in my life, I've done drastically more than that. So I also consider debt reduction a form of savings, because if you kind of get used to living a certain way, after you're done paying off that debt, you shouldn't start spending that money all of a sudden, right? You should start saving that money, because it'll be great kind of. So for me, you know, I paid off my student loans and then I just started saving everything that I used to pay off my loans with in an account, and that ended up being the down payment on my house. So at that point in my life, my savings rate was probably closer to like 45%.
Interesting. Let's see, I can say that I fell into like kind of the opposite trap in the fact that when I started earning more money with a new job, beforehand I was saving a lot of money. I didn't have much debt. As soon as I started making more, I found myself spending more and kind of like tried to upgrade my life in a way that was not healthy, and it depleted my savings and increased my debt. And so it's like, as I was starting to make more money, you would think if I would have kept my skills from making less, it would have worked out longer in the run.
Yeah, well, and I think a lot of people fall into that trap, and you kind of go with this thing of like, oh, well, if I spend more, like, I'll be happier and I'll have a better life. And what I've found kind of doing an opposite approach where I, you know, kind of overinflated my lifestyle probably in college when I first got out, and, you know, did a lot of really fun things. But then I started, like, cutting out different areas, and I was like, I'm actually not any less happy. Like, spending more money on food because I'm feeling lazy and I don't want to cook one night. If I just meal plan and I make a big casserole on Sunday, come Monday, I don't care that I'm eating a casserole versus grabbing Culver's, you know? Like, it doesn't change my life, and it doesn't make me any less happy as a person. I actually become happier because I can accomplish other things in life, like going on more trips and having a house and, you know, all these things that really bring me happiness, which my vacation budget is probably off the charts, you know, like that's something that makes me really happy. It's like 3 times the emergency fund. Yeah, but like, you know, so for me, I would rather sacrifice in these other areas so I can save for things, you know, bigger purchases that do really make me feel more fulfilled.
Right, it's about playing that game of, you know, cutting out a couple small things here and there adds up to something huge, right? Like, if you don't go out to eat once or twice a week, you know, for a year, all of a sudden you can go to Europe for 3 weeks. Like, it just adds up, like, so compound.
And something that we ragged on a lot in our last podcast is going out and buying coffee, right? Because that's such a big one that we hear all the time. Like, oh, you know, she buys coffee 5 days a week and you save so much money. And we were kind of joking, like, do people even do that anymore? Because, you know, like, we've heard about that so much, even in the media, right? There's news articles about, like, cut your coffee habit and save this much money. Well, when I bike to work, I go right by a Starbucks, and literally there's never less than 10 cars waiting in the drive-thru. I don't even know how many people are actually in the Starbucks. So
probably 2.
Like, clearly, yeah, probably only like 2. But
it's all about convenience.
Like, you know, so a dozen people every morning that I'm seeing in, like, the 5 seconds I'm biking past. So it's like, that still is a problem. And it's something like that, like, personally, I actually think, like, French press makes a better cup of coffee.
You can buy a French press for $40 and then use
$20.
$20
on Amazon Prime. So that's how I got my French press. And yeah, and then, you know, like, it's not, I think it cost me about 30 cents to make a cup of coffee versus $2 to $3 for a regular coffee at Starbucks. And I actually think mine tastes better.
Oh, yeah. Plus you get that sense of fulfillment of, I actually took the time to make something for myself that'll bring me enjoyment.
Well, and I also think, you know, people say, well, it's a convenience. I can get that cup at Starbucks faster. And I actually challenge you, because if you're waiting in a line 10 deep of cars, my French press, I can hit a button on my kettle to boil the water, and then go and make my lunch or do something, pour the boiling water over my grounds, leave it for like 4 to 8 minutes. But, you know, it's I can go and do something else, kind of be productive in the morning still. And then my coffee's ready to go when I am. So I really kind of challenge people who think like, oh, well, I only do that because it's convenient. Like, is it really, or are you just telling yourself that?
Right. How convenient is it? And plus, when you think about like the auto drip coffees, you can set a timer to start brewing that while you wake up or for before you wake up, so when you're up it's already made.
Yeah, exactly.
You wake up and have your coffee. That's like the epitome of
that's the dream, right? That's the dream.
Then you don't even have to, you know, drive that 1 block out of the way to get the Starbucks, right? And you don't have to wait in the line, and
have the uncomfortable social interaction, which we've already talked about. We're going to go off our way to make an internet login instead of calling someone, so just avoid people completely.
Perfect. That's a society I want to live in.
Living the dream right there.
So just to kind of
move
on a little bit, I guess. So we've talked a lot about savings, and I also mentioned I treat debt reduction as a form of savings. So when you're on the journey of debt reduction, which, you know, I was for the first 2 years out of college, I paid off my loans and then my car in quick succession because I very, very debt averse personality. But it's just really important to make that the priority. So instead of being like, well, I'm going to live life, and then at the end of the month, whatever I have left over, I'll put towards my debt. Decide the amount that you want to put towards your debt, make that the priority, and then adjust life around that. I think that's pretty good advice in that regard. So, do you guys have any final thoughts with that?
No, I think you covered the bases here. I mean, I think this is the best way to get started. I think, the combination of direct deposit with multiple bank accounts is, again, one of the things I think is the most successful. I think Mint.com or Personal Capital or any of the services out there now that show you what you're spending, give visibility into your lifestyle, and so you can react to it. You can't react if you don't know what's happening, right? And you can go through life without knowing what you're doing just by going, day to day and spending things that you would normally spend on. And then at the end of the month, like if you go out to, the bars on the weekends, be like, wow, I spent $500, this month on drinks, just when I was in college or when I was graduated from college. Maybe I should tone that back a little bit.
Right. You realize maybe I only need to spend $100.
Right.
Maybe
Yeah.
not buy a round of shots for a bunch of strangers.
Right. All right. So with that, we'll kind of conclude this one on savings and debt reduction. Join us next week we're going to dive into housing costs. So how much should you spend on rent? How much is insurance? We're going to kind of cover all that next week. Hey guys, thanks for tuning in to this week's episode of Money in the Bank. Make sure to subscribe to us on the iTunes or Stitcher app so that you get weekly alerts every time we post a podcast. Or if you want, you can visit my website, moneyinthebankpodcast.com. And if you want to reach out with any questions or further comments, please email me at Angie@moneyinthebankpodcast.com. I look forward to hearing from you.
Money in the bank.